divisions. Home care delivered a robust growth of 10%, another quarter of double-digit growth. Our fabric wash continues to drive consistent top-line growth. And during the quarter, we've launched Love & Care, a premium expert fabric care wash brand in select channels. Our household care continued its growth momentum, driven by our focus on increasing penetration of bars in rural and liquids in urban. Domex Pick Up the Brush campaign was extended to Tamil Nadu, onboarding another superstar in South India, Kamal Hassan. Beauty and personal care grew at 4% on the back of good performance in personal products. In personal wash, as you're aware, we are taking some decisive actions to strengthen our competitive position. During the quarter, we have landed many price reductions to pass on the benefits of commodity reduction and correcting the laddering of prices across our different packs. We also refreshed our communication on the popular segment. Pierce Natural Body Wash was launched nationally after the success of its soap range, and Fair & Lovely soap continues to gain good traction. Skincare delivered double-digit growth, backed by robust performance across brands. In this quarter, we brought in a number of innovations into the market, such as Pond's Micellar Water, L18 Body Lotions, and Pond's Super Light Gel. Hair care registered steady performance across the portfolio. During the quarter, Clinic Plus was relaunched with a new campaign, Meri Beti Strong, to bolster the product proposition in our communication. Color Cosmetics sustained its strong growth trajectory with continued focus on channels of future. Oral care growth was led by freshness and naturals proposition. During the quarter, we launched close-up attraction variants in select geographies. If I look at foods and refreshments, the category delivered an 8% growth across categories, with beverages, ice creams, and foods all performing well. If I look at our first half performance, for the first half of FY 2019-20, our domestic consumer growth was at 7%, and our EBITDA growth was higher by 14%, registering a healthy 170 basis points margin improvement on a comparable basis. Net profit was up by 18%. In the current challenging environment, this is a testament to the fact that HUL is well positioned to navigate the short-term challenges as we unlock the larger FMCG opportunity in India. We continue to reward our shareholders. I'm pleased to inform you that the Board of Directors have proposed an interim dividend of rupees 11 per share, up from last year's 9 per share. So that's a 2 rupees increase to our dividend per share payout. The consistency and resilience of our performance reflects our continuous focus on 4 key drivers: strengthening the core, driving premiumization and market development, constantly innovating and experimenting to lead in new business models and channels, and relentless focus on execution. Looking ahead, we expect the near-term demand outlook continues to be challenging, and we expect it to remain so for some time. The policy initiatives taken by the government augur well. Income transference to the rural areas, however, will be a key imperative. Commodities and currency will continue to be volatile. So our strategic agenda continues to be one of delivering consistent, competitive, profitable, and responsible growth. We continue to progress our purpose-led and future-fit agenda, which is underpinned by our sustainability initiatives and reimagining HUL, driven by leveraging data and technology in all aspects of our operations.
So is rural growing below urban? 0.5. Is rural growing below urban at this point?
Can we take one at a time, please?
Is rural growing below urban at this point in time? Because last quarter you said that we are at par. Is it now gone below urban, and by how much?
That's what Srinivas said. It is growing at 0.5x the urban growth.
So when you talk about 0.5x of rural to urban growth, where are the pockets that you're seeing pressure? Because there is liquidity that everyone's talking about. Also the wholesale channel. So where really are you seeing the pressure points, and how soon do you expect recovery?
When we say that rural growth is growing, first is, I think we should be absolutely clear that there is still growth in the market. It's not that the growth has disappeared. But yes, the rural growth, we expect it to be at a much higher rate for the simple reason that the penetration levels in rural India are much lower. And if we see the previous periods, whenever the growths have been good in the country in FMCG sector, rural has grown above the urban in the vicinity of 1.2 to 1.5x. So there is stress in rural, and that is the reason why the rural growth rates have come down to 0.5x. And it is broad-based, yeah, across the country, wherever there is a larger domination of the rural markets, you see the growth rates coming down. And because wholesale feeds into the rural markets, you see the stress from the wholesale also transmitting into the rural markets. But wholesale at the end of the day is a channel. So there is some stress on liquidity, but when we talk about offtake, it is the demand from the rural, which is where it has grown down, where it has come down.
So you spoke about price cuts during the quarter, especially in the personal care. If you could give us an understanding of the kind of price cut that you've taken through the entire quarter, and going forward, do we have more scope of price cuts considering also benefit from the corporate rate tax cut?
So I think let's split into two things. First is that predominantly the reason for doing some of the price reductions in our cleansing, which is our soaps category, is because of benign commodity. If you were to compare it year on year, the vegetable oil basket is lower anywhere between 15 to 20%. And if you really look at that, at least projected into the next 6 months to 9 months, at least it's expected to remain benign. Now we will see how international factors play out. But on the fundamentals, we clearly see it remaining benign. We had said last time when we declared results, saying that, look, we had looked at somewhere between 4 to 6% a reduction in the prices in our cleansing. We implemented Lux and Lifebuoy during the quarter, and we will actually be now implementing some more further reductions, whether it's in Dove or in Pears. Therefore, the whole portfolio corrects itself given the commodity. I think that's the first piece. So approximately about 6% is the price reduction that we'll do on the total portfolio. Part of it you saw in September quarter, part of it will come into December quarter. Now, the corporate tax reduction is a completely different aspect. Predominantly, it's been done with an intention to spur investment, and I think that's the right direction. We are actually looking at all opportunities, really saying how do we use that opportunity to kickstart some investment cycle, and in due course that should lead to consumption. I think today that is work in progress.
So, but do you think, as far as consumer offtake is concerned, offtake obviously has been impacted? Increased discounts or promotions or price cuts?
So I think fundamental drivers, I think one needs to go back, and I think Sanjeev talked about it. I think income transference and first income in the hands of the consumers, I think that is the most welcome step. Anything else that you do in terms of pricing, promotion, it's actually more tactical rather than strategic. We are hopeful that liquidity issues will get addressed as the government and central bank have taken many steps. We are also hoping that with many of the policy initiatives coming in, that will also work. We've always said, look, we also always want to focus on the consumer. So if we have to do something, we'd rather do everyday low prices, give the value to the consumer, and due course as some of these fundamentals fall into place, consumption will pick up. That's how we will really play this game.
Will you look at other categories as well for price cuts? Will you look at shampoo?
That's why I said I go back and say, where is the commodity? So that again, let's break it up. We have seen softness in commodity, predominantly in veg oils. We have seen some softness in crude, which means that we don't have to price up. And if there are some opportunities to price down in home care, we will use those, but we'll be judicious. It has to make sense. However, when you look at, let's say, something like our foods and refreshments, there's actually inflation. Yeah, whether it's sugar, whether it's SMP, whether it is even our ketchups. I think there's a sizable amount of inflation coming through, and you'll need to balance it. And as Sanjeev has always said, we will take an overall HUL approach to handling how we look at the portfolio, and it doesn't necessarily have to be a category by category or a pack by pack.
So when you say that slowdown,
It's generally broad-based, but there are some categories where the impact would always be more severe than the other. And discretionary categories generally end up taking a larger brunt of it whenever there is a slowdown.
Sir, price cut is only because of the declining commodity prices. So should we understand like this, that the price cut is not because of demand? That's not the issue because of this.
Of course. So look, the point we've always said is that you have to do fundamentally the right things from a consumer lens. Today, if my commodity prices are at least 15-20% lower year on year, Is it not fair that I pass that on all onto the consumers? So in the categories we have seen that we've passed it on, and it's not that you can just cut your prices and you'll spur demand. It's not a one-to-one correlation. Demand is a function of many things, and as we've talked about, it's also about consumer confidence.
Okay. And the 6% price cut that you're speaking about, have you taken or total?
Parts have already come in September quarter.
So parts means how much? 4%?
Yeah, something to that effect has come in September quarter. The balance will come in December
So
quarter.
the balance 2 or 3% will come.
That's right. Again, in the cleansing category, it's not company's totality. It is our soaps business.
Okay.
That's what I'm talking about. I think it'll be just also good to focus back and saying is, I think one important element while we'll miss in all of this is the robustness and the resilience of a performance of HUL. If you really look at our numbers, a 7% USG and a 5% volume growth in this quarter is actually a very, very credible and a resilient performance. I think it's also good to remember that when environment may be challenging, but the whole aspect that we talk about, our agility, our responsiveness, our ability to keep consumers at the heart of what we do, is actually a testament to really the robustness of this organization. I think while we'll all talk about the challenging environment, I think it's also important to just step back and focus on who's best positioned to actually navigate the short term while unlocking the long term. It'll be just good to also talk about that, while it's not a doomsday as Sanjeev said.
Yeah, I think we should just pause and reflect that first is that the country is still growing, albeit a bit slower, but it's still growing. Yeah, 5% GDP for a $3 trillion economy is still substantive. FMCG sector is still growing, both the volume and the value. And there are two important factors which impact the FMCG demand. Yeah, first is more money in the hands of more consumers. I think that's the critical factor. It is not about concentration of income in a few people. The more it is dispersed, because there are small ticket items, that's what spurs. And the second important bit is consumer confidence. I think the steps that the government have taken are all in the right direction. If you look at the corporate tax rate, this is not just a short-term thing. It strategically improves the country's competitiveness in terms of tax rate when you compare with other Southeast Asian nations. And this should lead to more investment, which in turn will lead to more employment and in turn the virtuous spiral coming into play. But this does take time. For a short term, I think it's very critical. If you look at the series of steps, the steps that the government took before the election and in the budget, whether it is on liquidity or whether it is on transferring more money to the farmers, that has to see the play happening. The other good bit has been the monsoons. I think monsoons in 30 out of 35 divisions has been adequate or above average rainfall. So that also augurs well. Yeah. And we should start seeing, hopefully, we are hopeful that things will start picking up. And as HUL, we never panic in a quarter when the demands are soft. And we never become very exuberant when the demands are looking very good. We play the game for a long term. Our strategy is long term. Whenever you raise question about price, I think we have to be conscious that we look at the price value equation. And there are various ways we spur. First, we don't cut back on our investment when it comes to market development and on building our brands, even when times are tough. So we will continue doing that. And that's how you build the long-term saliency of your brands, and you also expand the categories. So that's where our focus is going to be in the mid to long term. We have always, and we will remain bullish about the opportunities in India.
Just to add to what Sanjeev said, for example, in this quarter, we've again launched many innovations, come through across all our portfolio and divisions. And if you actually see sequentially as well as year on year, our advertising spends have actually gone up. Yeah. So this is actually the time to continue, and if I can say, maybe accelerate some of the market development activities, because they position you very well when we start to see some of the demand coming back.
Okay.
First is premiumization is still taking place. Yeah, but it is growing at a rate lower than the historical growth rate, which is completely understandable because the entire table of growth has come down.
So you've moved to the 22%.
It's 25.2. That's and with some of the disallowances, yeah, we moved to that regime. Yes.
From rural areas, have the inventory levels gone up? Any, kind of distress, like because liquidity issues are there, wholesaler not being able to pay.
You know, we have
Days, basically.
we have a great deal of visibility as far as our distributor's inventory is concerned, and our distributor inventory remains within our norm of a band that we play with.
Okay.
So it's not that our distributor inventories have gone up. The answer is no.
No.
So debtors, if you really look at, there are two or three elements. There's a marginal increase to our debtors. That's a combination of, let's say, if you see this quarter, there were lots of disturbances. Typically, there was lots of floods and disruption which happened towards the mid and the last week. So we had to put in credit, and it's absolutely the right thing to do to support in those kind of disruptions. So we put in some credit. There's been a little bit of credit pickup, which has also happened because of modern trade and e-commerce growing faster. Plus, also given that the big day and the sales are happening, we had to put in some credit, and that's healthy credit to put in. Yes, there is a bit of stress to liquidity. It's not so much at our distributor end, but if you really actually go into the retailer end, there is liquidity. So overall, if you really look at it, some of the interventions we made in our debtors are the right interventions. There is a marginal increase to our debtors, but that's quite healthy, and that will fall into place in due course.
Sir, have you seen your revenue mix change? Commerce in this quarter, if you could just.
One quarter
Doesn't matter.
is.
But sir, if you could tell us generally what it
Okay,
look like.
the question is modern trade growing at a faster pace? You have to understand that modern trade is predominantly in urban areas. If urban areas are growing faster, then it necessarily implies that modern trade is growing faster. Yeah.
So just one interesting thing. Last quarter, our numbers were exactly similar, 7 and 5. And coincidentally, it was actually 10, 4 and 8 between our three divisions. So this quarter has also been exactly similar. So between quarters, no, nothing dramatically has changed as far as the business is concerned. Having said that, if you see the outlook in the market and the conditions in the market and the broader market growth, that's seen a bit of a slowdown.
So a little bit of what by speaking to a lot of distributors. March, April, a lot of FMCG companies are doing offers and discounts, and because of this, wholesalers have gotten impacted a lot. This is what. Is that a strategy that you are actually?
Our e-commerce and modern trade growth rates, have been more or less in line with the shape of the channels and the historical growth rates, where they have been growing faster than the general trade. And you have to accept that the impact is more in rural areas, so that certainly general trade will get impacted to a bigger extent. And also the conduit through the rural areas is through the wholesale. So obviously the growth rate of the wholesale has also been impacted.
Plus, the other element to clarify is that the e-commerce portfolio per se is very different to what you sell in normal general trade. Our portfolio tends to be very sharply distinguished in e-commerce. It is different to the extent feasible in modern trade, and general trade is slightly different. So there can be some transference between modern trade to general trade, but e-commerce is a very different space.
And even in modern trade and general trade, the assortment is very different. Yeah. In general trade, you sell a lot of sachets. In modern trade, you don't sell sachets. So to that extent, it's a generally you can talk about it, but if you really go to specifics, it is not easily transportable from one channel to the other.
Can you be a little more specific in which categories we've seen a slowdown? Can we say home care has seen a significant last 2 quarters?
Okay, let me just recap again. Yeah. You know what Srini said, our shape of growth over the last 2 quarters has remained more or less similar.
Yeah.
The market growth has slowed down.
Yes.
Yeah. That would mean that we are growing ahead of the market. And for us, very clearly, is Skin cleansing or personal wash, as it is called, is where we have taken price reduction. So when you take this bigger price reduction, it impacts your value growth. Yeah. But if you look at home care, household care, our refreshment business, our food business, our skincare business, hair care business, they have grown in a pretty decent manner, even under the challenging circumstances. So overall, I would say we are pleased with the resilient performance of HUL, whether it is for the quarter that we have reviewed or for the first half year. Yeah, 7% kind of top line growth, about 5% is the volume growth, and about 170 bips of margin improvement. This is a resilient performance growing ahead of the market. And all of us should hope with the advent of the festive season, the consumer confidence should undergo a shift and people should feel more confident about spending the money. I think the government is also very conscious about this, that they have to spur the growth of consumption in the country, which will again lead to and facilitate the GDP growth rate of the country again picking up.
In terms of the festive outlook, if you compare, how would you?
You know, if you look at the Dussehra season which has gone by, it has been subdued, which is reflected in the numbers. Yeah, but I always say one is the income aspect, the other is the confidence aspect. And I think it is a duty of all Indians to help the consumer confidence go up. And once the confidence goes up, people feel much more confident about spending the money.
We can start spending more and actually talking
So
about what positive.
I would say when you step out, please have a Magnum.
Is there any downtrading?
It does happen, right? You know, let me tell you like this. When you look at the growth rates coming down, first is growth rates are still there. Many times we feel that growth rate coming down means people have gone away. There are categories like skin cleansing, like oral care, like fabric cleaning. It does not happen that people will stop bathing or stop cleaning their teeth. Yeah, and the slowdown reflects in many ways. The consumption goes down sometimes. Sometimes you have people moving from multiple brands in the household to a fewer brands. It happens from consuming large packs to smaller packs. So it manifests in different ways. Yeah, but highly penetrated daily essential goods, you don't automatically switch off. So the penetration does not go down, the consumption starts going. It does happen, and the more pronounced impact you see often in the more discretionary categories as opposed to more essential categories.
I think it's good to summarize what he called out earlier. Premiumization is still continuing. Premium actually still growing faster than the rest. Having said that, in pockets, there definitely will be some down trading, and it's nothing surprising just given the state of what's really going on today. So it's actually both are there. It's not as if it's only everybody's not down trading. There is premiumization. There are parts of down trading both.
In which categories is down to?
You need to be a lot more optimistic. Actually, it's nothing large enough to start calling out. Do you start to see in some parts of tea? It's quite possible as premium teas are becoming more expensive. There's always a large loose tea market. That's one small example. But again, nothing to really call out at an aggregate level to start saying that there is anything meaningful down trading happening. Are there some pockets? Yes, there are.
Thank you. So all you guys, wish you a very happy Diwali.
Same to you.
Yeah? Always a pleasure to meet you.
I missed you when you had come to the office.
Okay, well, that's the management of Hindustan Unilever, and they are very positive despite the fact that, and they acknowledge that there's a slowdown, but they're not too worried because they have the systems in place, and that's likely to see, well, in the long term, is likely to help HUL. We have revenues which are risen by around 6.7%, and that's a tad higher than what we were working with, at least as far as consensus expectations go. Volumes, on the other hand, within the expected range of 3 to 6%, on the higher end of 6%. on that range. It's 5% to be precise. On a quarter-on-quarter, again, a repeat of what we saw in the first quarter. We have with us right now Naveen Kulkarni of Reliance Securities, who's joining us on the show. Naveen, good afternoon. Thanks for joining in. Your initial take on the numbers, and if at all you've heard anything from the management, what do you make of it?
Yeah, so the numbers are pretty okay, I would say. From the revenue point of view, there is a slight beat. As far as the EBITDA margins are concerned, there is a significant beat, primarily led by better gross margins, right? So the gross margin expansion has been much more significant. We've seen a 230 basis points gross margin expansion. So the critical aspect will be the sustenance of the margins at these levels and also the revenue growth to pick up. So as of now, what the management is indicating, there doesn't seem to be a near-term, I would say, tailwind for the revenue to pick up immediately. So that will take some time, and thereafter the sustenance of margins at current levels, since they have started passing on the benefits of the input cost. So what I would say at this point in time is that the numbers are better, but I would say that this was kind of expected. Nothing which is significantly better than expectations. Considering where the stock is trading and the market capitalization of the stock, there is a mismatch between the revenue growth and that. So I believe going ahead, the revenue growth has to pick up meaningfully from here for the stock to sustain at current levels.
Naveen, also a word on the bottom line. What we're seeing is a significant expansion and growth as far as profit is concerned. To what extent can this be attributed to the corporate tax cuts? Is this in play now completely? And does that mean that on a year-on-year basis, we will have higher profitability from here on, not just possibly for HUL, but a lot of the other consumer companies?
Yeah, we will have, because what has happened is that in the first quarter, companies would have paid at a higher tax rate. And in the second quarter, of course, the effective tax rate for the remainder of the year will be lower, right? So this quarter, I think Lever has reported an effective tax rate of 20%.
Right.
So because in the first quarter, they paid at around 30%, right? So there is a mismatch there, right? So from that perspective, of course, there is a significant impact of corporate tax rate. But I think we are more focused on the operating profit numbers, right, which has grown at a very, very healthy pace, and the sustainability of that going ahead.
Okay.
So I will continue to remain a little more keenly focused on how revenue growth starts panning out in the forthcoming quarter. More important aspect will be some bit of pricing growth should start picking up. As of now, the pricing seems to be quite weak. The demand environment seems to be not that robust. So these will be the aspects that one will be keenly observing.
Okay, Naveen, do you think that 5%, roughly around 3 to 5% volumes growth is sustainable for HUL? Because they did indicate that there has been a slowdown. It's not impacted them yet, but there is some sort of a weakness out there. Do you think it will be okay for them to sustain this volumes growth anywhere between 3 to 5% from here on?
Yeah, 3 to 5% is sustainable. There is no doubt about that. But 3 to 5% is not a great volume growth number, all said and done, right?
Agreed, yes.
So the long-term volume growth is around 6.5% for Hindustan Unilever, right? And the stock over a longer period has traded at much lower valuations than what it is trading right now. Right. So from that perspective, if I were to look at the volume growth at 3%, 4%, 5%, 6% is not a great number. So the volume growth should pick up meaningfully, should be in high single digit, right? So that is when I think I would start thinking that the recovery has started coming through.
Okay, and finally, Naveen, the management will have a press conference, an analyst con call later on. What would you be looking for in terms of commentary?
So commentary, of course, one is macro commentary, something which is closely watched. And in terms of new product launches, what aspects, and third will be the merger of GSK and what is the progress on that. These are the key factors which will be closely watched.
Okay, we'll leave it at that, Naveen. Thank you so much for joining us and giving us your take on HUL's numbers. That's Naveen Kulkarni, and he says that, earnings just a tad above his expectations as well. Well, there isn't much to complain about given the fact that, to a certain extent, these numbers have been factored in. And of course, the bottom line being aided by corporate tax cuts, other than the fact that there has been a considerable expansion in gross margins, which has had a positive impact on your operating profits, and that consequently has also had led to a higher earnings per share. Well, on that note, it's a wrap on the special earnings as far as HUL is concerned. Of course, we keep getting you much more on earnings. Stay tuned to BloombergQuint.